Hello, everyone. Welcome to our webinar. This is about townhomes at Equinox on Lincoln, which is a 92-unit build-to-rent community that we're developing in Idaho Falls, Idaho. Anna and I are thrilled to share this one because this is a rinse and repeat of one of our most profitable and quickest projects. We've been working on this one for over 2 years, so it's been baked and baked and baked and baked some more, and so it's finally ready to go. We're very enthusiastic about the potential for profits and cash flow because it's almost impossible to project 23% annualized returns in this environment plus depreciation. And we'll explain how we got to that number. All right, let's get started. Most of you know us well, but for those that are new to our ecosystem, we'll spend a moment to tell you a little bit about who Grow Capitus is. We'll then talk about this amazing market, and then we'll dive deep into the specific location that this property is going to be built at. And then we're going to show you the project itself, its design, its features. Now, unlike other construction projects, we will show you actual photographs. Remember, this is a rinse repeat of one of our most successful projects, so you'll get to see a full visual. And then you'll get to see the numbers in detail, so assumptions, loans, splits, returns, rents, and more. We'll give you the timelines, we'll give you the investment minimums, and then we will answer your questions. Now, some housekeeping. Feel free to type in your questions into the Q&A box, and I will be asking us those questions at the end. And you'll get a copy of this webinar in your mailbox in about 48 hours, and just in case you need to jump off. Now, do note, numbers might change, even though this project's been running for 2 years, so we think they're pretty dialed in. Our lawyer wants you to know that this webinar is not a solicitation to purchase securities. For that, you would need to review the PPM and the subscription docs. Our goal today is to get you comfortable with the information so you can continue your due diligence with the investment summary and the subscription docs. Let's introduce the team. I'll start off. My friends call me the mad scientist of multifamily, and that's because of my focus on data science, process-driven improvement, and data-driven testing and analysis. Anna, she's been my exceptional sidekick on this journey since 2018 when Grow Capitus was launched. Say hello, Anna.
Hello, everyone.
Our portfolio of 24 projects has had 9 successful exits, and over 800 investors have given us hundreds of millions of dollars to invest in these 11 states, roughly 3,800 units in the portfolio. And here's a partial look at our portfolio. Now, this blue section on the left, these are 6 projects that we purchased and we've already sold successfully. Now, this green section on the right are our new construction projects. Now, as you can see, all of these have already been built. They all look lovely. And one of them, this one here, is the Equinox Idaho Falls project, which is the precursor, the inspiration for the project that we're working on today. Now, down here in orange, you can also see that we go beyond multifamily and townhomes into investments like self-storage and industrial flex buildings. So every one of these experiences, it's taught us something new, something different, and we bring all of that knowledge into the Equinox on Lincoln project. Now, there is no better proof of our hard work and our cutting edge use of data science, our investor first attitude, than this slide. Here in the white box on the left, you can see the original projections for these 9 projects. And then right here in the blue box, you can see that we doubled both the IRR, that's time value returns, and the AAR, that's average annualized returns, on the 9 projects that we've exited so far. Now, in case you're thinking that everyone's made money in multifamily in the last 5 years, we do want to point out to you that these 2 projects on the far right, these have exited in the last 5 months after interest rates have already spiked for more than a year. So we're especially proud of these 2. Now, our investors love what we're doing. Here is Jennifer. She is a super experienced investor. She compares us to much larger companies with more projects, and she thinks that we come out ahead. She also really enjoys our high efficiency processes, and she likes the fact that the team has not really changed since the beginning. Here's Dr. Pada. He's a general partner with lots of deals of his own. Please check out his comments in orange. And it comes down to true use of data to optimize results, and we're very, very good at that. And that's why Dr. Pada keeps coming back to us to invest. All right, with those initial thoughts out of the way, let's now dive deeper into this opportunity. Equinox on Lincoln is a rinse repeat. It is an enhancement of one of our most profitable projects. And on the screen, you can see this beautiful project. Equinox Idaho Falls is a 66-unit townhome built to rent community, roughly 2 miles away from the project that we are now building. Our tenants, they love living in this community. Everyone lives in a two-story townhome. They all have their own backyard, a one-car garage, their own driveway, and they also have additional parking in the back of the community. And as you can see from these beautiful interiors, these are gorgeous townhomes with 9-foot ceilings, granite countertops, modern appliances and fixtures, all 66 units with 3-bed, 2.5-bath units. Something that we actually regretted doing and we're fixing with our second project. Let's take a quick look at the video of the first community. Here's a drone video. What happened to the audio? Are you guys hearing audio? I'm not hearing audio. All right. So as you can see, the community is anchored by a beautiful central park. You just saw it there. And there is a playground, a fire pit, and a barbecue area for the community. You can see lots of extra parking in the community. And by the way, you may not see it on the video, but we've used a lot of different pastel shades to differentiate the different areas, different buildings from each other. All of the homes are very energy efficient and also very modern. And you guys can hear me, right? Just want to get a thumbs up.
Yes, we can
Yeah,
hear
okay.
you.
All
Just
right.
couldn't hear the
The video
any
music.
sound on
Yeah,
that.
for some
Oh, there,
some
I hear
reason.
it now.
Yeah, it
I
just
think it
came
was
up for a
just
second.
very delayed.
Yeah.
Yeah.
All right, so here's a view of the playground in that central park. So you can also see all of these backyards that are opening into the central park in this picture. Note these individual buildings. Some of them have 4 townhomes, some of them have 6 townhomes. We did paint the doors a bright yellow color, very inviting. Here's a view of the kitchen, granite countertops, custom cabinetry. Note this cabinetry. This isn't the basic stuff that you get from Home Depot. This was beautiful fitted cabinetry built by a local woodworker. Here's a closer view of the kitchen and the pantry, and you can see how nice the subway tile backsplash is, how clean the granite countertops are. Now you're looking from the kitchen into the living room. So take a look at the flooring, very nice design. Also take a look at the main door, and you'll notice this big, thick, upgraded frame around it makes it pop. And also notice that there's a full height window that runs all the way down here next to the door so that the hallway, the staircase going to the second level, they're all brightly lit. Here's a view of the master bedroom. Once again, notice the upgraded trim around all of the doors. This is a large bedroom, nearly 14 feet wide on one side. Here's a view of the second bedroom, and you can see that there's plenty of storage in this second bedroom as well. And these are the views of the 2 bathrooms. The bathroom on the left has a shower, and we were able to upgrade the shower to build these niches for soap and shampoo. We were able to put high quality tile that goes almost all the way to the top. So no plastic walls here. On the right here, notice how nice the cabinetry is, and check out these modern faucets, check out the modern lighting. So why are we showing you this community? Well, that's because the first project was a template for us. And this template was so successful, so profitable, that we've actually formed a separate company called Mission 10K. You see it behind me, which is now building 10,000 rental townhomes. So we're replicating our template 2 miles away with some enhancements that we're very excited to show you today. The first Idaho Falls project was built entirely during COVID, right? But from the day we put it in contract to the point where it was 100% leased, we took only 2 years and 9 months. 3 months were lost because of supply chain issues, and we still did it under 3 years. Now, this was built as a townhome buyer project rather than a syndication project. So for an apples to apples comparison, we actually reworked the numbers from a syndication perspective, and here are the profit numbers for the first project. As you can see, we did phenomenally well. Our bank loved how hard we worked on this project, and their comment was that our project was the only one in Idaho Falls that was built on time, on budget during COVID. Why? Because we have an incredible team in Idaho Falls that works on these projects. Our construction project manager, who works on all of our development projects across the US, who happens to live in Idaho Falls, 10 minutes away from the property. And that is an incredible blessing when it comes to getting the right product. Now, in case you're wondering, the Idaho Falls community, it isn't our only completed townhome project. We've also built more upscale townhomes like this 46-unit community in Raleigh-Durham. Looks really beautiful, right? But ironically, what we learned from building this project was that it financially makes sense to build smaller And so now we tend to build with a significantly smaller budget than this. And here's another high-end project that we built in Houston near the Texas Medical Center. Once again, what we learned is that our target audience wanted something more straightforward and simpler. We took that knowledge and we used it to build the first Idaho Falls project. We've tried a lot of templates, folks, and we know that the Idaho Falls template is the best, it's the quickest, and it's the most profitable. We're also taking a lot of experience from building apartments and also some student housing here on the right and some flex industrial projects. So along the way, we've picked up extremely valuable team members who are true experts at pre-development and construction. Here's your first quick look at the Equinox on Lincoln project. Remember, I mentioned that we regretted having all 3-bedroom units at Equinox, the first project that we had in Idaho Falls. That's because half of our incoming phone calls were from tenants who wanted 2 bedrooms instead of 3. But they did want the privacy. They wanted the security that comes with a townhome that you don't get with an apartment. So this project has both 2-bedroom and 3-bedroom townhomes, and there are 2 different kinds of each. So now that we've given you a quick initial taste of our Idaho Falls projects, we do want to back up and talk about why there's such a growing need for townhomes in the United States. In short, over the last 4 years, COVID utterly destroyed the American dream of homeownership. And I want to draw your attention to this graph on the right. That green line is the median rent down here. And you can see that in 2023, the median rents were around $1,800 in the United States. Now, I want you to look at the orange line, which is the average home payment. And as you can see in 2023, there was a huge gap of almost $1,300 between the monthly average rent and the average mortgage. If you look carefully, you'll notice, going back, this gap is much larger than it was in the last 12 years. In fact, this is the largest gap in affordability in US history. So keep that in mind. And now let's talk about the impact that that gap has had. On the right, you can see that in 2013, right here, 50% of all home listings were affordable on a median income. So not perfect, but not bad. Now let's take a look at 2020. Well, that number was at 45% on the day before COVID. Now let's look at the last 4 years. And this is going to blow your mind. That number is now down to 16%. So only 1 in 6 home listings are affordable on a median income. Millions of families that would have been able to afford a starter home before COVID are now forever renters. And this is especially true for families that are earning $60K to $85K a year. Their choices are extremely limited. But these families, they have kids, they have dogs, they don't want to live in apartments. They need solutions. And we are providing a true alternative, but at rents that they can actually afford. So what's this alternative to apartments? Well, it's built to rent, or BTR. Recently, builders around the US, they've started building new single family or townhome product, but it's designed from scratch for rental. These are not apartments. Tenants have their own front yard, backyard, a garage, more windows, more light, no other tenants above them or below them. So when COVID happened, this build to rent BTR market, it exploded. Every tenant now wants less density, more space. They want light and bedrooms and backyards. And so build to townhome projects are renting fast, and their rents are rising even faster. Now, these have scaled property management. They have centralized maintenance. So BTR has naturally become the hottest and fastest growing segment in all of real estate. Build to rent tenants, they stay longer, they pay more, and they default less than any other segment in real estate. And new construction means no surprises, no big maintenance bills for at least a decade. Berkadia are providing 2023 data that demand for BTR continues to skyrocket despite the current economic headwinds. Average rents are now over $2,000 a year. Average occupancy, amazingly high, 96%. This is a fantastic market to get into, folks. So now I'm going to hand over to Anna. She's going to tell us a little bit more about the fantastic state and also the powerful metro that we found through our cutting edge data science research. Anna?
Thank you, Neal. Before we hit our market, let's talk about Idaho, one of the fastest growing states in the country. Why? Well, because urbanites are saying goodbye to big city life in favor of less crowded, more affordable inland cities and towns in the US. And nowhere is this trend more evident than in Idaho. The housing market's booming. Out of state people are pouring in to take advantage of the gem state's relatively affordable cost of living without all that big city traffic. And let me tell you, Idaho, in terms of accolades, is dominating. It was the #1 state for economic momentum in 2022. This measures three key metrics which we care very much about: personal income growth, employment growth, and population growth. Also, the Tax Foundation has ranked Idaho first for net gain of residents from interstate migration, noting that the latest IRS and census data shows that both people and businesses, they favor states with low tax, and that can impact and boost the state's economic growth. Fitch gives Idaho the coveted AAA credit rating, while USDA rates it as the #1 state in the country for agricultural commodities. You know, Idaho wins too many awards to put them all on one slide. So we have two slides. And as you can see, best state for fiscal stability, best for middle class, best to start a small business. If Idaho isn't the top state, it's usually in the top 3 in the US, a hidden jewel that very few investors know about. We have been tracking Idaho's rapid rise since 2018, which is why Neal traveled to Idaho to really fully understand the scope of the growth. Now let's zoom into the superstar metro that is Idaho Falls. And Idaho Falls is doing even better than anywhere else in the state. Is that even possible? Okay, are you ready? Idaho Falls was just named the best performing small city in America by the illustrious Milken Institute, which is phenomenal. But really, anyone looking at the data for the last 12 months, they really wouldn't have no other choice. In fact, some of you may be wondering, how did you find Idaho Falls? Well, it was in our monthly market data mashup
Yep.
meetings. This was back in 2020. And I was every which way we sorted the data. Idaho Falls came out on top, and not by a little, by a huge amount. We knew we had found a unicorn market, and Neal, he jumped on a plane to fly
Hmm.
there. Now this was during COVID, this was during the pandemic, and vaccines hadn't even come out yet. He went there to meet with every person in the city he could find. 6 months after Neal put our first project in contract, Idaho Falls became the best small city by Milken Institute for the first time. And of course, based on the data, who else could they choose? Idaho Falls is the only city to win Milken Best Small City Award 3 times in 4 years. Now remember, there are over 1,000 cities to choose from. So to win 3 times in 4 years, that's just astonishing. Idaho Falls is also proving that large population metros are not necessarily better equipped to seize market opportunities. Take a look at this chart, which shows you annual job growth. Idaho Falls is averaging a 4% annual job
Wow.
growth. Four,
Yeah.
yeah, 4% a year in a country that averages, the country, US, it averages under 1.5%. So this city is growing 2.7x faster, 2.7 times faster than US job growth rate. Now it's going to be really hard to find even one other city in the US that matches that jaw-dropping growth. So, wow.
Yeah.
Now, with high paying jobs and remote working as the new norm, Idaho Falls is also just a super attractive place to live. Area Vibes livability rating of exceptional is awesome, and it also has A+ amenities rating. It's located less than 2 hours away from breathtaking places like Yellowstone National Park and Jackson Hole. So weekend vacations are like stone's throw away. It's a amazing location for outdoor enthusiasts. They can enjoy some of the best skiing, camping, fishing, hiking, hunting. Really, it's all there for anyone that wants it. It's a fantastic work-life balance. What's also terrific about Idaho Falls is that it has very diverse jobs. As you can see from this pie graph, there's no single dominant industry. Education, government, leisure and hospitality, professional and business services, trade, transportation, utilities, All of these are represented in an economy that showed extraordinary resilience during COVID, where much larger states and cities suffered. Idaho Falls that just powered ahead without a breather through the pandemic. This is just a fantastic city. And speaking of jobs, the Idaho National Laboratory, the jewel of Idaho Falls, is the largest employer here. Many in Idaho Falls residents are among the 4,000 employees who work at this huge 890-acre complex. It was established in 1949. The world-class lab is the country's leading nuclear research facility, and it's also a leader in clean energy research. It has an annual budget of about $1 billion with an average annual wage of $98,000. Anyone looking for a high-paying job? Now, on top of that, the workforce has grown by over 20% during the last 10 years. And an upcoming expansion is expected to add 1,200 to 1,500 more jobs to Idaho Falls in the next 3 to 5 years. That is just more good news upon more good news. And as we touched on earlier, the success of a metro depends on great jobs along with quality of life. Well, Idaho Falls is home to a massive group of millennials thanks to great higher education options, career opportunities, affordability, key, and really endless opportunity for outdoor recreation. In fact, Eastern Idaho has been named the best region in the country for millennials, which is projected to grow another 26% by
Yeah,
2025,
huge deal.
compared to the national average of growth rate of 3%. Isn't that nuts, Neal?
Yeah, it's crazy.
26% compared to 3%. So basically, thanks to top employers, which include major healthcare and there's like billion-dollar e-commerce companies, Idaho Falls is where all the young people are moving to. Now, let's look at our project. Our project provides an unparalleled opportunity to develop a landmark community in one of the fastest growing areas in Idaho Falls. Now, here in blue-green, that's where our first community, Equinox, Idaho Falls, is. And then in red, you can see the community we are building now, Equinox on Lincoln. Both communities are only a few minutes from downtown, and we are surrounded by affluent residential communities. We're in close proximity to Idaho Falls' largest employers and as well as the 3 universities. And let me tell you, we have
Oh, I
picked a
love this.
micro neighborhood. Yes, it is just incredible. Please pay careful attention. These are mind-blowing numbers. First, in orange, you can see the unemployment rate. It's 1%. I don't even know if it can get any lower, honestly. The nation's unemployment rate is at 3.9%. But the next number, the magenta number, it is far more impressive. The home appreciation forecast for this region over the next 3 years, this neighborhood, is forecasted to be a shocking 58%. That's about 19% a year for the next 3 years. Show us a micro neighborhood anywhere in the US that's higher than that. I just, it's very, very hard to find. Now, one of the reasons that people are moving to Idaho Falls, that's the lack of traffic that we discussed. 86% of the jobs in the entire city are located in less than a 30-minute commute. In light blue, you can see the really stunning income growth in this neighborhood. In the last 2 years, people in this neighborhood are seeing their income go up by more than 10% a year. And lastly, in gray, you can see that the population growth in this neighborhood is 2.6%. That is 5 times faster than the national average. In fact, it's one of the fastest rates in the nation. Again, I want to emphasize these numbers are not good or great. They are mind-blowing.
They're crazy. They're
So
totally crazy
yeah,
numbers.
they're just crazy numbers. So you can see why we're really excited by this submarket. Now let's talk about the specifics of our project. Okay, stick-built construction, which is used for single family and townhomes, is an extremely fast and simple construction method that is proven and relatively inexpensive. This allows us to cut construction down to almost half the time we would take to build an apartment complex. And that's very important because, as you will see, this project will be built very fast. Now let's look at the layout of the community. On the lower section are the 3-bedroom, 2-bath units. with
Mhm.
the 2-bed, 2-bath units along the top row. Now, see that road in the middle? This allows us to phase the project and start renting instead of having to wait to get a certificate of occupancy for the entire project. Also, notice there are no fancy pools or clubhouses. The townhome, the yard, the garage, those are the most important amenities to our renters. Remember, we're not going for sexy looks. We're going for annual rents at or around $20,000 a year for a brand new townhome. That's what makes this a perfect project, not beauty, but practicality that fits a need. This is profit with a purpose. These are affordable townhomes for the middle class American family. Now, this view shows you the larger townhomes that are over 1,500 square feet. They have a large front yard and a 2-car garage in back. This next view shows you those 2-car garages. So this is the back side of those larger townhomes. And then here you can see a view of a 3-story building. This is a 2-bed, 2-bath. In this building, the ground floor has just the garage and the laundry with the backyard. And the second floor is one big living space with a front balcony. And then the bedrooms are on the 3rd floor. We think that young couples are really going to like this style. Now, this next picture that will show you a green building. And the green building is a 2-story, 2-bedroom townhome. Now, there it is. The
Yep.
bedrooms are on 2 separate floors, which really makes it ideal for roommates or students.
Yep.
And then this is the view of the townhome. Let's see, where are we? Oh, one more. There it is. That is the exact copy of the ones that we showed you in the first community in Idaho Falls. This is the 3-bedroom, 2.5-bath layout. It's extremely efficient and super livable. And then finally, here's a view of the entire community, kind of looking down the street. You can see we've used a number of different pastel shades, blues, greens, cream shades. You know, it feels like any other single family community, and that's the point. This community is for people that want to live as close to single family lifestyle as possible. Now, we mentioned this project will be built fast. Why? Well, because we've been working on
Yeah.
it since early 2022. After extensive negotiations, we went into contract on this land in April of 2022, so over 2 years ago. In that contract, the seller gave us 15 months to close on the land. And so it was time to close on that land in July of 2023. By then, we had seen the success of our first Idaho Fall projects, so we didn't hesitate. So in July last year, Neal and I invested 1.9 million to buy the land, and we put in about another $400,000 for architectural design, permitting, zoning, stuff like that. So that really shows our level of commitment. Millions of our personal cash was in for a year to get this project going. Now, we don't expect to get that initial money back out of the project until July this year, but we just didn't want to miss out on this fantastic project. And let me tell you, we have been very busy. More than a dozen team members have worked on this project during that last 2-year period. And at this point, the zoning is 100% complete. We have 90% permitting complete and city approvals. And in fact, we will be breaking ground in June. Yes, June, that's next month. Remember, we're 2 years in. And by the way, you're not paying for those 2 years. We want to emphasize that we are not taking profit out of the project for those 2 years of hard work. Now, let's take a closer look at the awesome location. Here in the red box, that represents our location. This is just a phenomenal part of Idaho Falls. It is half a block from a large park, and only a few hundred yards away is a brand new Costco with its own gas station. And then opposite that Costco is the city's largest development project. It's got hundreds of thousands of feet of mixed use and retail development. It's in late construction. So the majority of it will be finished before our community opens. And it's going to include a large, popular grocery store, Brolem's, which is awesome for our tenants, retail, restaurants, schools. It's only just a few minutes away. And that Idaho National Lab is only a 5-minute drive to the left. The site is really in the path of progress in Idaho Falls. It was very difficult to acquire this site. We're very happy with it. As we mentioned, we learned a lot about Idaho Falls residents and what they want during lease up of our first project. And so we decided to have a very interesting unit mix. We're going to have two different kinds of 2-bedroom units and two different kinds of 3-bedroom units. And what's amazing is that per square foot rents are extremely low, but still allow us to achieve a projected return of 23% a year. Once again, take a look at these per square foot rates. That is what's amazing about Idaho Falls. The property taxes, the insurance, the construction costs, the land costs, it's so low that our tenants can pay less than $1,800 per townhome on average and live in a brand new community. Now, here are the building designs. We've spent a lot of time crafting different styles of buildings so that we can appeal to all of the different renter populations in the city. On the left, in blue, you can see the Lincoln 2. It's a 2-floor plan with 1 bedroom and full bath on each level. Unit sizes are roughly 1,100 square feet with a 1-car garage. You can see that we also have a 3-story version. We call this one the Lincoln 3. This one has an extra bathroom and larger living space on the 2nd floor with all the bedrooms on the top level, and it still has a backyard and a 1-car garage. In green, you can see the Fiona buildings, which have 3-bedroom, 2.5 bath. This is the larger floor plan with a 2-car garage. It also has a large front yard. Now, this is for tenants that can pay the most and want the most. And then in magenta, you can see the Jenny Lee plan, which is exactly the same as the townhomes in our first project, Equinox on Idaho Falls, located on Jenny Lee Avenue. Now, this is the value of rents and repeat. You learn so much from the previous project, and you can make the next project a lot more resilient and attractive.
Yep.
Now, back to Neal.
Well, thank you. In summary, we are extraordinarily committed to this project. Nowhere else in the US do we see this level of opportunity. The net in migration to Idaho, amongst the highest in the nation. This is a low property tax state. Insurance costs are very low. Their cost of construction is very low, but their quality of life is much higher than other cities. So as a result, it's very hard to find any market in the US that has higher NOI, net operating income, for every dollar invested than Idaho Falls. So if you've been following us for analytics, please know that there is no better market. In fact, we are so committed that I am signing on a full recourse loan so I can get the lowest interest rates. Yeah, you heard that right. If I don't do my job, if Anna doesn't do her job, they can come after my home and all my other assets. So we're super motivated to get this done. All right, let's show you the timeline for construction and lease up, right? Right here, this gray box, that's the final plat approval. We should get it later this month. Now, remember, this is a city that we worked with before. We have a great relationship with them. We feel very comfortable with this timeline. Civil construction, which is the horizontal construction where you dig under the ground, you put in all the pipes and wirings, that should start in July with some preliminary work starting in June. And then here, the vertical construction where you put up all the timbers and the buildings should start only 4 months later. It's a pretty small project, so the vertical construction goes pretty darn fast. And here's what's really cool. Listen to this. After only 8 months of vertical construction, we can start the lease-up process. Why? Because with small townhome communities, you can ask the city to allow you to get temporary occupancy permits and build them phase by phase. For the last Idaho Falls community, the city was very flexible. We had tenants living there for a year while the rest of the community was being built. This is a huge, huge advantage over building apartments. Apartment buildings take longer to construct, and they're very, very difficult to phase. Bottom line, this means that the project gets right here to rental income next October. That's only 15 months away, folks. And that's why the project works with such high projected profits. And remember, we did better than this forecast for our last project. And we did that one during COVID. One thing I want to point out is our construction loan is from the same lender, Bank of Commerce, that gave us our loan the first time around. As you know, with higher interest rates, lenders are actually pulling back and giving lower loan to cost or LTCs. But our lender was so happy with our performance the first time around that they still agreed to give us, again, a 70% LTC. Why is this great for you? It means that we need less equity to complete the project, and that boosts our overall profits. Now, important. Many of you have heard about the challenges that developers are having leasing up projects in different parts of the country due to this large amount of incoming inventory. Now, even Idaho Falls right here was affected by that incoming inventory. But looking at CoStar, this is the most reliable predictor of future occupancy. Right here, we see that the 3-star product in Idaho Falls, this is the orange bar on the left, this matches our townhomes. This has already returned from up here to a vacancy rate of 4%. Compare this to the yellow line, which is 6% for the US. And you can clearly see CoStar predicts that vacancy will stay extremely low all the way to 2028. Now, here on the top right, you can see that even though we saw a brief spike in vacancy right here because of all the incoming supply, at no points have rents dropped. This is unlike many major cities which have seen significant drops in rent. Booming population, fast growing incomes mean that rental rates have been stable even through all of this incoming supply. Now, what about incoming delivery in the future? Well, bottom left, you can see here 2024, 2025, 2026. There's only one community delivering in the next 3 years. It's a large one, but it's a single community that's delivering, which means that we should be able to lease up very fast. And right here on the bottom right, you can see here that CoStar is predicting strong continuing rent growth. The orange bars here, they show that this community should have 3.5% to 4% rent growth all the way to 2027. And this gives us a lot of room in our pro forma. And then one of the most projected important question is projected rental rates. Sure, we have growth, but let's take a look at the competitive properties in the Idaho Falls market. Looking at all these new communities, you can see that the apartments that have been recently built here, they're averaging about $1,631 in rent, and they're averaging rent per square foot of $1.45. Now, our community will charge about $140 more per month on average for townhomes. Now, that's a very small gap between apartments and townhomes. But the most important number here is the rent per square foot. Right? We're projecting that our rent per square foot will be only $1.35 per square foot, where existing communities are $1.45 per square foot. And none of these comps, not one of them, has private garages. Bottom line is this: we're able to provide extremely high quality product at an extremely low cost in this market. This isn't something that we can do anywhere else in the US. And we're working with 2 different builders to get the very best pricing. On a per square foot basis, Idaho Falls has some of the lowest construction costs in the country, and we are already working with townhome experts. So you can see both of these companies, they're focused on the townhome market, and we're working with them to figure out, the best prices, fantastic prices. So we feel comfortable that we'll beat our own projections in the pro forma. Now, Jacob Grant Property Management, they're going to manage the property. They've got 15 years of experience under their belt. They manage 750 units in Idaho Falls, in Rexburg, and Pocatello. They did a wonderful job of leasing up our first community, and they gave us so much feedback, all of which is incorporated into our new unit mix, so that should potentially make this second lease up even easier. Now, their property management fees are just 7%. This is much lower than we are forecasting anywhere else in the US. For example, for our communities in Utah and Arizona, total cost of property management over 10% when including payroll. But in this market, you can get an expert at a fraction of the cost. All right, let's end this presentation with a little number crunching, take a very quick look at the financial. The project size is about 23 million. We have a strong contingency budget to make sure we don't run over budget. This is not a difficult or complicated product to build, so we don't believe that we're going to go over budget. We're raising a little under 7 million in equity. 5% of that will come from Anna and me. More importantly, though, we've invested over $2.3 million of our personal cash for a year just to get the project to this point. We're not charging any profit on that money, just some interest. Our bank is Bank of Commerce, very friendly, really loved how we did on the first project. They're giving us a 70% LTC loan, so that's about 16 million. Our construction loan rate assumption is about 8.63%. It's lower because it's a recourse loan to me. Now, this is a floating rate, but we have extremely strong belief that the US economy is now weakening, and we'll see rate cuts later this year. And so we have a good amount of buffer built into this interest rate, because by the time we finish spending all of our equity and actually start drawing on the loan next year, we should have lower interest rates than this. After we finish construction, we're going to get a mini perm loan at a very conservative 65% LTV for that loan. We actually think we can do better. We think the final number might be as high as 75% LTV. Now, because we chose 65% for our number, we're only returning a small amount of your capital in year 3. Now, if we go up to 75%, we'll return almost a third of your capital at the time of refinance in mid-2027. We've assumed a 5.5% interest rate for the mini perm loan, so that allows us to complete stabilization and exit at the end of year 4. Remember, this is a 4-year project, not a typical 5-year project, much faster. Let's finish with fees and splits. The developer fee is a standard 5%. We decided to defer 50% of the developer fee, and this reduces the equity requirements and boosts your cash flow, boosts your profits. The asset management fee is a standard 1% of equity raised. Now only starts after certificate of occupancy, not right now. Now interest rates are high. Construction costs are still high. So we couldn't make the project work with our standard splits of 70-30. So we boosted your split to 75% with 25% for us. Even with all the benefits of Idaho Falls, lower construction cost, lower insurance, lower property taxes, low cost of land, 70% LTV, cheaper property management, even with all of those benefits, we had to take a hit on GPT profit to make the project work. And remember, we also didn't take a profit on 2 years of work that we put in and the 2.3 million that we invested over the last year. So bottom line, we had to make adjustments to make the project work in this environment. Another thing that we did to make the project work is that full recourse loans, because those have significantly lower rates. We have a standard guarantor fee of 1% and a disposition fee of 1% at the end of the project. Investors will receive a preferred return or Pref of 6%, 7%, or 8%, depending upon how much they invest. Now, one item to note, once you hit an average annualized return or AAR of 25% a year or higher, there's a bonus tier for us, which is determined at exit. Only the portion of profits that are above that 25% level are split 50-50 between limited partners and us. To repeat, this 50-50 bonus tier, it only affects the portion of profits above 25% a year, determined at exit only if we overperform. How can you invest? Well, accredited investors can invest in 3 different levels, depending on your level of investment. The difference between these classes is the preferred return, the Pref. B1 investors get a 6% Pref, B2, that's 7, and B3, it's 8. 200K is the minimum for B3. If that's too much, invest in B2 class with 125K or B1 class with a 75K minimum. Here are the projected returns for all 3 classes. Now you can see here, right here in this column, there's no cash flow in year 1 because of construction, but all classes have some cash flow projected in year 2. Now year 3 also includes a small return of capital when we refinance. And this one here, year 4, is the exit. So if you look at the tables on the right, B1 should receive a 22.4% average annualized return with a 1.9x multiple. B2, 23%, 1.92 equity multiple, and B3, almost 24% with a 1.95x equity multiple. So these kind of returns plus the depreciation tax benefits on a 4-year project are extremely difficult to get in this environment. This project's going to fly because we're also accepting 1031 investors. So up to 2 million can be accepted and applied to the value of the land. 1031 investors, they invest separately from the investor LLC. They use a compliant tenant in common or TIC structure. So they have direct title to the property. If you're not investing as 1031, you can invest cash, self-directed IRA account, or a solo 401k account. We can accept only up to 5 TIC investors. So the minimum 1031 investment is 250K with priority given to 500K or greater. So bottom line, we think this could be our best BTR project ever. Idaho Falls is a unique metro. We're not doing anything new. We're taking a successful project and rinse repeating. We've built townhomes in many parts of the US. And more importantly, we spend millions of dollars of our own money to shield you from zoning risk, entitlement risk. Townhome construction is high-speed stick-built construction that allows phased occupancy for faster cash flow. We think this is a great time to invest in rental townhomes when the buyer-renter gap is the highest in history, and BTR is the fastest growing segment in all of real estate. And these BTR tenants, they're higher quality, they stay longer, they pay more. And we've done a lot to make the numbers work. We're giving you higher splits. We're deferring our fees. We're signing on a recourse loan to keep the interest rate low, and we're not taking profits on the 2.3 million that we invested. Lastly, most importantly, we think this is a phenomenal neighborhood. We could see home prices in this neighborhood spike by over 50% in the next 3 years. If you get even halfway to that number, this could be a true home run. And that's our presentation, folks. We know many of you have questions, so we'll take questions at this time. We're putting up a poll. It's coming up on the screen. Anna's throwing it up. So you can let us know about your interests. So please answer that poll. And we will leave the poll up until the end of the webinar. And Anna is also putting a link in the chat. You also see, by the way, this link on the screen right here in white, right? So this is live, so you can invest now. You don't have to wait. And one last point, there are some slides like property taxes, depreciation details. It didn't make them to this deck, but we have these slides in the deck later on in case you have questions about all of those different things. So there's more content here. We will be sending this deck out to you.
All right. You ready?
Yep.
All right. Let's see. Will you take time at the end to address how the current project can pull rents of $16.95 per month when the same demographics data for Idaho Falls indicates a median rent of $931?
Median rents are, firstly, that number that you're showing me is not an accurate number. So I'm going to scroll back. I know that hang on. So let's go here. Oops.
I think it was early on, Neal.
Yeah.
And they might have even just looked something up on the internet. I don't know.
Yeah, I think so. So I want to point something out to you. This is the median rent. This is CoStar. CoStar is a $17 billion company. They have over 1,500 researchers. They're not perfect, but they're really, really good at what they're talking about. So I want you to look at this number here. Do you see this? This is $1.40 right here. So this is average for Idaho Falls, not for townhomes, just for apartments, old apartments. Some of the apartment complexes in Idaho Falls were built in the 60s and 70s. That's the average, $1.40. Now you tell me, how can $1.40 add up to $900, right? Because you'd have to have a tiny apartment that is only about 600 or 700 square feet at $1.40 to add up to $900. The rents in the marketplace are clearly, and here are the rent comps. I want to show you the rent comps. You have to understand that this is the market for new product. These are all real rents. These are today's rent. Anyone can Google these properties. They all have websites. These are their rents. Now, what is the most important rent comp for us? Our own property, right? So same product, 2 miles away, all of our rents are $16.50, $16.95. You're welcome to take a look at our own rents that we are publicizing today. I think we have a couple units that are coming up for renewal, and they're all in that 1645, 1695 level. But any of these rents, these are all real communities. So we're not really forecasting townhome level rents. We're saying we might be 100, 150 bucks above what a standard apartment rent is. Obviously, people want to live in townhomes. They want to have garages. They want to have backyards. They don't want anybody above and below them, so they pay a premium. We're only charging $150 premium. Here you can see those numbers.
Won't a spike, this is related to the CoStar data, won't a spike in 4 to 5 star supply in Idaho Falls push 3-star rents down or starve 3-star demand? Is there a mitigation plan?
Not at all, because what happens is, you've got right here. So here's a perfect example, right? See this blue, right? This is 4-star. 4-star is a very fancy place with lots and lots of amenities. Well, keep in mind that 4-star rents are always above $2,000. So here, there's a 4-star community coming in. It's leasing up, right? And it's having an impact on our inventory. So this is us, orange, 3 stars. So as you can see, affected. In 2023, we did see a spike in vacancy rate. Now, our community's vacancy rate, this is vacancy rate for 3-star product for all Idaho Falls. We never went above 5 or 6 units. So, sorry, I think we had 5 units once, and then we had 3 units. Most of the time, we've had the community either fully occupied or we've had 1 or 2 empty units. So I'd say our average occupancy has been around 95 or 96, somewhere in that range. And that was in the last year when you saw this spike where the overall market for 3-star went all the way up here. But here's the point. CoStar's already factoring in that 4-star is delivering. See that? It's factoring it in. Obviously, this 4-star is affecting 3-star properties, but right here, you notice this is 2024. We're actually right here, right there. CoStar's already saying, hey, 3-stars returned to 4% vacancy. And I think that that's what we are going to see for the next 3 or 4 years, right? Because we have one more building, one more big 4-star building coming up, and that's going to be right here. You see this building here? That's one property, a big property that's delivering. But other than that, there's nothing delivering. Look at this. There's no delivery coming up in 3 years. That's so lucky. Normally, if you look at our other projects, these bars, there's going to be a value for this bar in all of these 12 quarters. Here, it's just one quarter. So we're extremely lucky, and that's why you see the 4-star projection is right around 4% all the way through. This is all of our project, the entire time that we're in there, and it's roughly at 4%.
All right, let's a few questions about the previous our existing property. How did the precursor property do in terms of exit? Were you able to sell all the houses at the exit?
Yes. So that particular property is, if you remember, I mentioned it was actually a property where individual owners bought units, including us. And so here are the returns for it: 20% IRR, 25% average annualized return. The project was a little bit under 4 years, so it was like 3 years and 11 months, something like that. Remember, we built it from the very beginning to where the land got into contract to where we finished our lease up in 2 years and 9 months, and we lost 3 months because of COVID supply chain issues.
How was the occupancy of the first BTR community and average rent?
Somewhere between 95 and 96%. Our rents in summer go up, so they go up to about 1750, 1795. So we have many tenants living at 1750 and 1795. In wintertime, Idaho Falls gets cold, and so they tend to drop to 1645, 1695. One other thing I want to point out is developers usually give, concessions, and we had to give some concessions to lease up the property as well. But pretty much all of the property was either a 1-month concession or a half-month concession. Our properties in Utah, so in Provo, in Phoenix, are leasing up with 2 months of concession.
Yeah. Why did you put so much of your own funds into this project as opposed to raising money from investors early on like other projects?
I'm going to be just blunt and honest. If we had taken your money last year in July, the profits would not be any higher. It's just your money would then be in for 5 years, and the projected returns, which we have right here, they wouldn't look very nice. So we had a choice. Either we could let the property go, right? We could just walk away from it and lose a little bit of money, or we could wait for a year until it was completely shovel ready. So we decided we can't do this obviously with every project, but I love this project because I feel in my bones that this is going to work for us. So we got together and we said, let's just find money from somewhere. We borrowed money actually, and put it in here. But we can't really, in this environment, so hard. I mean, construction costs are high, interest rates are high. We really couldn't make a 5-year project work. That's the most honest answer I can give you. Sure, could have bought you in July last year, but you would have made the same amount of money in 5 years instead of 4 years.
Would we get 100% depreciation on what we invest?
Well, nobody gets 100% depreciation on any asset, even if you're buying, one like Midtown Ridge, this value-add property that we had a few months ago. So usually on $100,000, you'll get a certain amount of depreciation. Now, we couldn't get the exact numbers in time for this presentation, so this is something that we're going to be providing later. We think that the depreciation is going to come in somewhere around 50,000, 55,000. That's pretty common, by the way, these days. Now, as to whether you will get it as bonus depreciation in 2025 or 2026, depending upon how much construction we finish. We'll either do depreciation next year in 2025 for 2025 tax year, or it might be 2026. Sort of hard to tell at this point in time. Probably 2025. Now, 2025 is 40% bonus depreciation. Now, as many of you know, if you're real estate investors, there's a bill that has bipartisan support to bring back 100% bonus depreciation. So if you get 100% or 80% bonus depreciation coming back for 2025, then you'll get a lot of that depreciation up front. If you don't, then you'll get it basically over several years.
Will this investment be impacted if interest rates do not come down?
We don't believe so. Again, one of the ways that we sort of hedged our bets is that if you're using an 8.63% rate, so this rate really doesn't have a lot of interest rates coming down. Our bank also wanted to see that. They also didn't want us to kind of sort of make the assumption that rates will come down. So if they don't come down, I think we're comfortable at this 8.63%. If they don't come down in 2 years, meaning when we finish construction and we're going on to the mini perm, yes, then the project would be affected if they don't come down in 2 years.
Is there guest parking somewhere?
There's a little bit of guest parking. So there's a park at the top left. So here, so there's and sometimes these things don't look very large, but this is actually a pretty large area. So look at the size of this building. This is 5 homes, right? So there's a large area here. Then there's guest parking right there. So you see here.
Yeah, right there. So each
and there's also guest
there
parking
at each
here.
bay.
Yeah.
Each bay has it, Neal. So if you go to the top of the 3-story ones, those are guest parking up there. It's just it's a little hard to see because of the perspective.
Guest parking here as well. So there's plenty of guest parking. It's sort of sprinkled around the community, and there's a park right here.
Yeah.
Again, looks small, but these are big areas.
Would there be an exit for sure, or would you consider a refinance if there's a decrease in interest rate and pay the syndicate investors?
I am not opposed at all to a refinance. If we can refinance and get at least half of your money out, then I'd like to keep the property for longer. We'll have a conversation. We tend to be very investor friendly. We'll see, if it's going really well, and I expect it to go really well. This is an amazing, amazing, amazing market. I can't say that enough. If we can get half of your money back through a refinance, we'd like to keep it longer, and you guys will give us feedback on that. We're very open.
Let's see. When is your desired closing date? So May, I imagine you could be asking for 2 reasons. So I'll take that question. One, anyone that signs a doc as a syndication investor, once you sign docs and you're confirmed, you have 10 days to wire the funds, or 20 days if you're investing through your IRA. So it's tied to when you sign docs and your spot is confirmed. Now, if you're asking because you are a potential 1031 investor and you need to coordinate the closing so that it matches with your timing, we are looking to close the construction loan in July. And so that would be the timing for the 1031 exchange. Of course, we have to have the money in the bank well before that to close the loan. So we can't wait, for everybody else to come in until July. That has to be coming in. Our lender needs to see the money coming in. So those are the two ways to look at it. Are the forecasted deliveries for townhomes only or for all multifamily? I think
that was all
multifamily
multifamily
question.
Yeah, the CoStar.
Yeah, they don't have a separate
slide do not separate townhomes. So the data that you saw there was for all multifamily, every multifamily unit, small and big communities. So there's really nothing coming except for this one property. And by the way,
right.
I've seen information about this property. Their rents are going to be $400, $500, $600 higher than ours. It's very fancy, very good looking, got lots of amenities, but it's for people that can afford another $500, $600 in rents.
How crucial is the proximity to Costco? Do you envision that being an additional premium to the rent?
We haven't put a premium in, but the honest answer is absolutely. I think that it's not just Costco. So I want to share this slide with you, right? So this is our community. This is the park. So this doesn't look very, actually the park is below this blue ball. So there's a very nice park here with lots of pickleball courts and things like that. And so, it's sort of walk out from here and you can walk into the area. This right here is the Costco gas station. This is Costco. It's a big brand new Costco, so a couple of years old. So this area here, do you see this area? Now, as you can imagine, Google doesn't update this every day. Right now, this is all dug up. And this here is not, the back portion here is not dug up anymore. It's already built, right? So there's construction going on here, but this portion here should be completed. This is all kinds of stuff. I mean, this is going to be one of the biggest projects. So it's not Costco. As you can imagine, the moment Costco comes in, guess what happens, right? Everybody wants to be next
It's a
to Costco,
magnet,
right? So it's in,
right?
I can't imagine a better magnet than Costco. So this Costco has done an incredible job, and all of this area is being developed. There's restaurants, there's expensive multifamily, there's all kinds of stuff. There's tons of retail, right? So they're developing amazing stuff. This is all walkable. You can just walk out of the community,
Oh yeah,
go through here, and walk in here, right? You don't need a car.
yeah. Let's see. I think we should go to the slides that are talking about cost,
Mhm.
the financials.
Sure. Let me see if I can find
So
those.
the average cost per unit is 250K, and the average rent is 1750. So I think you need
Yes.
to go to the financial slide.
Okay, so
I
I'm
think it
gonna
was
go.
250.
Let me see.
The
Financials. Here it is.
so
This
so
one, right?
so I mean, this is the project construction cost. Yes.
Mhm.
So yes. So the average cost per unit is 248K. So let's say 250K, and the average rents. If you go to the rent slide, Neal, I think
Yep.
it's so I think it was
I'm gonna see if I can go
1738 or
to
something
unit
like that.
mix
Yes,
here.
unit mix would have it.
Yeah. Yeah. Keep in mind that these rents are, a year and a
1783.
half from mine. Yes,
1783.
1783, right here.
Yeah.
This is the key number, $1.35. Every other Mission 10K project that we're working on, the lowest that we've been able to make numbers work has been $1.62. And that's one project in Kansas. Most of the other projects are $1.70, $1.80, $1.90, even $2 a square foot. What's special about Idaho Falls is this insane combination of very low property taxes, very low insurance, cheap land, and low construction costs. And then you take those four, and then you can combine it with extraordinarily high growth, because there's many parts of the US that has these four things where population's declining, right? But in terms of Idaho Falls, in 3 years, in 4 years, it has won City of the Year 3 times. So it obviously has incredible momentum and growth, but then it also has incredibly cheap rents, right? And the math works. And I want to say this, I can't say this enough. This is profit with a purpose. Everyone that's living in our community is going to have basically have 21, 22, $23,000 a year in rent. So if they have incomes in the mid 60s, mid 70s, they're not rent burdened. I love that.
When does the preferred return begin accruing? I
So the
can
pref
answer that.
starts to, yeah, go ahead.
The
Go ahead.
pref the pref starts accruing 15 months after the close of construction loan or at certificate of occupancy, whichever happens first.
Yep.
And so that's all in the PPM, and the underwriting matches that timing.
Anna, do you want to talk about the
Um,
underwriting walkthrough video?
sure. So that version that you're looking at, Neal, doesn't have the link, but are
Hmm.
on the when you go to the actual website and you
Hmm.
download the investment summary / deck, there is a link that's in pink that says click here to watch the underwriting walkthrough video, and it's about a 40-minute walkthrough of the Excel model, where we explain, Pete Levine, our director of development, is explaining each of these numbers. So Neal, if you go back to like the previous slide where we're talking, we'll walk you through all of those construction numbers,
Yep.
walk you through
Yep.
the debt, walk you through all of this. And why don't you just leave this on the slide as up as well. So I definitely recommend that you, if you like numbers, you want to understand what is behind all of these things. You see all that stuff on the left. What is all of that? we go through all of it in detail. It's 40, 45 minutes. You can always speed it up a little bit if you want to watch it a little faster, but you will understand where all these numbers, what all these numbers are.
And what's nice is because we're
Let's
doing rinse repeat, a lot of these projections are tighter than normal. We know what the property taxes are going to be. We have a community there. We know what the PM fees is, insurance. There's so many parts of this that are really, really well known because of what we've already done. So very tight.
We have two questions that are kind of asking the same thing. You talk about projects which you existed with great return. Do you have any projects where you were not able to make the projects your return, or projects that had lagging exits longer than projected?
Yes, yes. We've had several projects that are apartment projects that are affected. So we have a project in Phoenix, and that project has been delayed by more than a year. What I find good about stick-built construction is you're building it so fast that even if there is a delay, then the delay is much shorter. So we have a project in Phoenix that's been affected in terms of delays. We have a project in Austin or close to Austin that's been affected, and one in Utah. So these projects have all been delayed, some by 8 months, 10 months, 12 months, 13 months. Part of that was simply the fact that some of these projects we couldn't get loans for a while. So that pushed the project out by 6 or 9
Interest
months.
rates.
Yeah, interest
Yes.
rates were too high. With Bank of Commerce, that's not an issue. These guys love us. They even watch our webinars.
More questions about depreciation.
Mhm.
So no, this person's asking if they would get 100% depreciation in year one. No, there is no depreciation in year one. There is no asset to depreciate in year one. So
Right.
the earliest any depreciation would occur is in tax year 2025 or tax year 2026,
Yep.
depending
Yep.
on when everything is complete. And then that's going to depend on the laws in place about how much depreciation we can take according to the tax code.
Right.
Let's see.
Most people in the industry feel very comfortable that the law will pass, the one that, is 100% bonus depreciation. And it'll start from 2025. So if we end up doing depreciation in 2025, which is pretty likely, then we'll get 100% depreciation. But that law still has to be passed. It's, as I mentioned, it is a bipartisan act, but sometimes these things don't pass. So take that with a grain of salt.
We see that Idaho Falls has negative 1.5% median home prices over the last year.
Mhm.
How is the forecast for the next 3 years so much higher, and how will this affect rents?
Because the forecast is based on a city level. So it is not unusual for a city to have a negative forecast growth, and then for an area to have high forecast growth. And the gentleman that was asking questions about Costco, it really goes back to this. This part of Idaho Falls is growing very, very fast. This is the part near Ammon, in case you know where Idaho Falls is. Not all parts of Idaho Falls are growing. And keep in mind that the person who's asking the question, you're right. In the next 12 months, Idaho Falls might lose about 1.5% in home prices. The question is, please take a look at the growth in Idaho Falls in the last 5 years, and you will see absolutely mind-boggling growth in home prices. Every city has to take a breather. And with interest rates being at 7.5%, 8%, we are seeing that people can't afford the mortgage. Now, why is that bad news for us? We're not building single family homes. We're not builders. It's good news that people can't afford these homes. If they can't afford these homes, guess what they're going to do? They're going to look for townhomes. This gap is what you're talking about, right? And that gap is affecting home prices. So they're affecting them a little bit, right? But keep in mind that if home prices go up by 55% over 5 years and then they come down 1.5%, they're still up 53%. Most people can still afford them, right? So even in Idaho Falls, now homes are selling, and clearly you're looking at the web. So look at what homes are selling for. Now, at 7.5% mortgage, try to figure out what your mortgage payment will be. I bet you that mortgage payment is $2,500 to $3,000. Well, we will have townhomes at 1783. So there's a significant portion of the population that will pick the 1783 over the 2,500.
How does this BTR compare with the build to rent New Braunfels?
New
There was no
Braunfels is a
mentions
most,
development, assuming,
yeah,
yeah, go ahead.
that's more of an aspirational project. So one of the things I want to say is I think that this project is better than New Braunfels because of New Braunfels. We built a lot of townhomes in lots of different places. We've learned a few things. We've also learned things from New Braunfels. New Braunfels is more aspirational. It is a richer market. People in New Braunfels earn $20,000, $30,000 a year more as a family. Rents are much higher. So New Braunfels, our average rents are, I think, in the $2,500, $2,600 range. Um, it is not profit with a purpose. It's simply a project for profit. This project is both a combination of doing something that creates a lot of profit, but it's also something that's great for middle America. I can't say that for New Braunfels because you need incomes of 85, 90, 95K on a family level for New Braunfels. So definitely a more upscale project. It has a pool. It has
A
it has a
clubhouse,
clubhouse. So it's a different level of product. Now, having built New
a different
Braunfels,
type of product.
we
Yeah.
probably wouldn't build that kind of product very often. We'd probably build this kind of product way more often. So that's what we've learned.
Are you sure a second project in the Idaho Falls area will proceed the same as the first time around?
Why not? The area's population is growing really fast. And this is not like our Phoenix project. We're building 600 units in Phoenix right now. We're only building 92 units, folks. And we're hedging our bets, right? The first project was 66 units, so it was a little bit smaller. But all of those units were one type of 3 bedrooms, still got leased up. Here, what we're doing is, okay, we'll give you a 1,100 square foot 2 bedroom, or a 1,300 square foot 2 bedroom, or a 1,350 square foot 3 bedroom, or a 1,500 square foot, 3 bedroom with 2 car garages. So we're actually having tenants at 4 different price points, but still only 92 units. Whereas the previous project was 66 units with one price point. So I think that it's actually easier to lease this one up.
What is your projected cap rate at exit on the project when it sells?
I
It
don't
is
have that handy.
5.1.
Yes,
It is.
5.1.
It's in my head. That's why.
Awesome. Awesome. Keep in mind, Idaho, Utah, Washington State, these are Western states. Cap rates in Western states are lower. So if we were doing this in a different market, we might choose 5.2. We might even choose 5.3 in some markets. But Idaho has always been a low cap state. Boise is under 5 cap. So if we were doing this project in Boise, we'd probably have 4.9 cap. In case you don't know what cap rates are, the lower the cap rate, the higher the exit price.
Is your plan to sell the project 4 years from now to a private equity firm like BlackRock?
Nope, not at all. So BlackRock would not buy a 92 unit project. So this would be in Idaho Falls based company or a company based in Boise, just somebody that invests in Idaho Falls. The mission, I think you're thinking more about Mission 10K. Mission 10K is building a much larger project, 4 or 5 of them in a community, and then wrapping it up to 600, 700 units. That's a different mission. It's not tied to Idaho Falls.
Neal, can you go back to the slide that shows the cash flows? It shows the
Sure.
projected returns with cash flows, and maybe leave it up there. We
Mhm.
have somebody asking, can you explain what the payback is each year and after year 4?
Sure.
So
So there is
this
no after four
slide,
years, right? So the project
right?
ends at the end of 4 years. So here, no cash flow in year one. This is all construction. Then you start getting some cash flow because this is a phased project. So we already have tenants about a year from now starting. So you start getting some cash flow, but still because the community is being built and it's not fully leased up, this cash flow is not very strong. And then year 3, there's both cash flow and return of capital. So $12,500 on 100K, $23,000, 40,000. So if you're investing 75K, you're getting 12 grand. If you're investing, 125K, you're getting 23 grand. So there's, obviously this is a happy year. And then year 4, same thing happens. You're getting cash flow, and then you're also getting sales proceeds. So if you're investing, class B1, 75K, you're getting 127K back. And if you're investing class B2, which is $125,000, you're getting 213K. And if you're investing 200K, then you're getting 343K. So obviously, these 2 years are pretty rich. This year has some cash flow. This year has none.
Is the rent rate of $1.35 per square foot including the garage or just the heated space?
My understanding is it's just the heated space. Anna, am I correct
That's
with that?
my understanding. That's
Yes,
my understanding as
yes,
well.
yeah. That we're not counting the garage in that. So the garage is gross, but heated space is net.
Yeah. Um, how much are returns impacted if the exit cap rate were 6% or 6.5%?
I'm not sure we have a an
We
a
we
an
we don't have a
analysis.
sensitivity analysis
Okay, well,
on cap rate on exit
we'll
cap.
take a look into it. But one of the key things that I would like to point out is this. This is a phenomenal market. My question to you is, where are you seeing today? Today, obviously, is a very bad time to be selling, correct? Everyone agrees on that because interest rates are extremely high. Please show me any part of the United States, good, bad, ugly, fast growing, slow growing, no growing. Please show me brand new product that is selling at 6 cap today. And this is really the lowest prices that you're going to get are going to be now or for the next 6 months because interest rates are so high. But please show me Class A product. I promise I will buy it. Right? There is no Class A or Class B brand new single this kind of product available anywhere in the United States for 6 cap. I think you may be able to get new product at 5.25 cap today, and in some crappy old market you might be able to go 5.5, but that's absolutely the worst case scenario. So please keep that in mind.
Can you explain preferred return versus IRR/ARR, AAR?
Sure, I'll return all of them. So I'll talk about all of them. The first part of preferred return is it protects you and it forces us to make a bunch of money before we can make anything in our splits. So let's assume that you're investing in this B2 class in the middle. Your pref is 7%. What that means is, once we return your capital, the first 7% per year, that's 7% multiplied by 4 years, 28%. We got to give you 28%, and we can't take any portion of that split. That's your pref. Now, after we pay you your pref and we pay the other investors their pref, then whatever money is left over, out of that money, we take 25% and you take 75. So this first 7%, you take 100% of those returns, right? The rest of the returns, you're taking 75%, we're taking 25%. That makes sense? Now, based on that calculation, we calculate returns in two different ways. The first one is really simple. If we're projecting, okay, you make, on a 200K investment, you make 389K. Well, you're basically making $189,000 in profit. That's an equity multiple of 1.95x or close to doubling your money. 2x would be doubling your money. So we take that 1.95x, we divide it by 4 years, and we come up with this number, 23.7 or 23 or 22.4, depending on what you're investing. Another way of saying it is, I'm making 22% a year for the next 4 years. It's called simple return or average annualized return. Now, IRR is different because it's time value of returns. And remember, you're not making any money the first year, and your cash flow isn't particularly high in the second year. So in those years, you could have put your money in the bank and made some interest on it. Therefore, while your annualized return may be 22 or 23%, your internal rate of return, which counts for the value of time, says, hey, I'm going to knock some number back. And that's called internal rate of return. So the IRR here is 18 or 18.4 or 18.9. Institutional investors do not look at AAR. They only look at internal rate of return. And so their calculations are based on these. And I have to tell you, they would love these numbers. Of course, these are projections, but if they achieve them, they would absolutely love them.
Why is there a return of capital in year 3 before preferred is paid?
So we first return your capital for tax reasons. If we pay you your pref before we return your capital, you'll have a taxable event. So what we do is, as we do refinancing, we actually pay it back as a return of your capital. So it's not a taxable event for you.
But in general, the waterfall is laid out in the private placement memorandum as well as the operating agreement. So, how we distribute money is dictated by the waterfall in the PPM.
Yeah,
So
yeah.
that is what we have to go
We
by.
have to follow that process.
Are B1, B2, and B3 the same level in the capital stack?
Yes. So they're not, it's not like
Great
any
question.
one of them is above the other. They're next to each other. The B1s, the B2, and B3 are next to each other. So it's not like the B3 is above the others. It's just, when we are distributing pref, we give 6% to B1, 7% to B2, 8% to B3. So the B3s end up getting more dollars, right? But they're not above anybody else. They're next to each other.
What's the likelihood that the units will be sold individually in year 4?
Very,
I
very
would
small.
say
Yeah.
very,
So
very small. It's
so
not
if the
plotted
market
that way to sell them
explodes,
individually.
yeah, we'd have to go back and replat them. There's going to be there's going to be plumbing issues and other things that have to be redone. This is set up as one community. It is not set up as individual townhomes. It's possible to do it. Let me put it this way. If Idaho Falls goes completely crazy and these townhomes end up being worth $500,000, $600,000 each, sure, we'll go through that pain. And in that case, you're
Yeah,
making, 5x, 6x returns. So you'll be very happy. But there has to be a phenomenal increase in townhome value for us to consider that.
Is there state income tax?
Well, I think that question is very difficult for us to answer. There's a lot of, things that we need to talk about. I'm assuming you're talking about your taxation event. Idaho is a low
Yeah.
state tax state, but it is not a no tax state. No state tax state. Low, not no,
Yes.
not no.
Let's see, Neal, do you see anything
I'll take a
that we
look.
have not?
Um,
Where is the yard? Do you have an aerial view? Maybe you can
yeah,
go to one of the Idaho Falls, the
definitely.
original Idaho
Let's
Falls to
yeah, let's look
show.
at the pictures, right? So in the pictures, there are definitely aerial views, and right there, you see these are not very large backyards. Just so you know, the backyard is only about 8 feet deep by about, I'd say this is about 17 feet wide. So you can easily fit in a table, a chair, have some plants, that kind of backyard, right? So it's a private backyard, and that's what people care about, but it's not very large. So you can see all of these there, all of the units have backyards, all of them.
Yeah, and then there's a gate that opens
Yep,
from the backyard
right,
into the
right
the
here.
main courtyard space
Right. So
there.
it's opposite this door. There's a gate and it opens into this area. This area is pretty big. I'd say this is about 70 feet or
Yeah,
maybe well,
it's
more
big.
like 55, 60 feet. And then this is about 350 to 400 feet.
Can you talk about sensitivity of exit caps to interest rate cuts? How much do you expect a 1% cut to reflect on exit cap based on your knowledge about the area and comps?
So we've so far had an increase in interest rates by about 450 basis points. And we have had a increase in cap rates by 125 basis points. So 450 basis points led to 125. So you can divide that and get the number. Hopefully that you're asking a technical question, so I'm trying to give you a technical answer.
Um, are these individually metered units, electricity, water, other? That's a little bit of a complicated answer, a little bit complicated with what the city's making us go through. Each building is it's kind of crazy what they want us to do, but there's like, say it's a 5-unit building, we have one line coming in with water to feed 3 of the units, and then the other 2 units are individual. It's kind of I don't know why they're making us do it that way, but that's what they're having us do. So, but they are so not quite individually metered, but we'll have to break off per unit and have the tenants will pay back the water, or it will be metered to them. Same thing with electricity. We will basically bill back anything that we can, but the electricity should be individually done. There's no gas.
Yep. There's no gas.
All electric. Neal, anything?
By the way, Idaho Falls has the cheapest electricity rates that I've ever seen. I pay 42 cents per kilowatt hour. I live in California, and the rates in Idaho Falls are 11 cents per kilowatt hour. I couldn't even put solar on this community because I wasn't making any money. Their electricity is very cheap, very cheap. The city itself sells in electricity. No, I think I went up and down. I couldn't really see much. So I think we're at the 90-minute
Anything that we
point.
haven't already answered? Yep.
Yeah. So thank you, everyone. There's 100 of you still here, so I'm very grateful for your interest. This is a lovely project, and most importantly, it's close to my heart because this is profit with a purpose. So I'm hoping that all of you will consider joining us. I think we're going to do really well on this one. Thank you so much. Thanks for your time.
Thanks, everyone.